Good morning, or I guess good afternoon if you're watching this at home, or good evening, or good middle of the night. I'm not sure when you folks at home watch these. So whatever time of day it is, I hope you're having a great day or night. Wanted to dive right into the homework today. We're going to spend some more time on A.J. East today. And we're getting pretty near to being done with Chapter 3. And we will start Chapter 4 predictably after Chapter 3. And Chapter 4 goes pretty quickly. So it seems like we just took a test, doesn't it? But I like to always give at least a week's notice for the next test. So it'll be coming up, after today we probably have at least 3 lectures more, and then we'll take the test. Maybe 4. But I just want to give you, and I'll get more specific with you all face-to-facers. And of course, you at home have your due dates for the test emailed to you. But I wanted to let you know that, so be aware of that, okay? And I'll get more accurate information as we move along. But okay, let's dive into those 3 handouts. I think I gave you handouts on unearned revenue, accrued expenses, and accrued revenues. Is that correct? Okay, so let's go ahead and take a look at those. And I believe last period I put the answers to these on the screen real quick for you to copy down. Okay, it's kind of just check figures. In that first situation, on November 1st, we collected $6,000 rent in advance, debiting cash and crediting unearned rent revenue, and they were paying 1-year rent in advance. So if they were paying $6,000 for 1 year, basically our rent is $500 per month, right? So between November 1st and December 31st of 2011, we have earned 2 months of rent, right, at $500. So we can move $1,000 out of unearned rent revenue. We debit that since that's a liability, and we credit the revenue. And you might have said rent revenue or just revenue or whatever. Okay, so that is the first one. Please ask questions as we go along if you have them. Company B. This company is a exterminator or something like that. They charge $75 a month for a complete house treatment. Now, one customer paid us, or paid Company B, $300 on September 12th in advance of any treatments. Now, we had not yet provided the service, had we? So we had to, at that point, record it with a debit to cash and a credit to unearned revenue. Now, at the year end, the company had performed 3 total treatments. Okay? Well, when they gave us $300, if we charged $75 per treatment, then they'd basically paid for 4 treatments, correct? And we had provided 3 by the end of the year. So we could take 3 times 75 and move $225 from unearned revenue into revenue, or earned revenue. Okay? Company C. Here we have, on September 1st, a client paid us $24,000 for 6 months of rent revenue. Thus, we're renting a building to them. It's $4,000 per month. We recorded that amount on September 1st as unearned rent revenue. Adjustment needs to be made at the end of the year. Okay, well, we have earned 4 months of that $4,000 per month rent revenue, right? So we can move $16,000 into revenue and decrease our unearned rent revenue. Cool? Any questions on that? All right, let's jump on over to accrued expenses. Accrued expenses. And of course, in each one of these, I'm not answering the key question, specifically, but I guess we kind of were. But I hope those kind of help you think through what the AJE will be. Okay? All right, Company D. What amount or salaries expense of $15,500 have been incurred by our company's employees, but they haven't been paid as of December 31st. So I say, what amount of liability and expense is not recognized on the company's books but needs to be? Well, that 15.5, right? So we have to book that as salaries expense and as salaries payable, because that is a liability that we owe, isn't it? And we need to show it on our books so that readers are aware of that liability. That liability can be quite large for some companies. Now make sure you don't put accounts payable, okay? Don't put accounts payable, it should be salaries payable. Accounts payable is more for transactions with vendors, okay? Another common accrued expense is in regards to interest expense. Company E, on December 31st, the company owes $250 of interest on on a line of credit loan. Now, we don't have to pay that interest until sometime in January. But we know that as of December 31st, we owe $250 worth of interest. So that interest and payable is not on the books. It needs to be. So this is our journal entry. We debit interest expense. We debit interest expense. We credit interest payable. Now we do not credit notes payable. Okay, it is not notes payable or something like that. It is definitely interest payable. Okay. On the test, a lot of times people make a mistake and they credit notes payable. And I lovingly take off a point, okay? Okay, company F. The company has a mortgage payable and has incurred but not recorded interest expense of $875 for the year ended 12/31 of 2011. We must pay the interest on January 7th. Okay, what amount of liability as of 12/31 is not on the books but needs to be? $875. And there's our journal entry. Okay. Now, some people might incorrectly try to like prorate it or something like that. Did anybody try to do that? But it tells us specifically the amount that we owe as of 12/31/2011. They tell us the liability, and that is $875. Now, this is a good example of why I don't like people to have like an account called like interest. Because look, there's an interest expense account, there's an interest payable account, there's an interest or another interest expense, another interest payable for that company. Okay? You're going to see in the next set of an accrued revenues, you actually have an interest receivable and an interest revenue, right? So I don't like it when people are doing their journal entries and they just have an account called rent or interest. You see what I'm saying? Because it's too vague. Go ahead and tell us, is it rent expense or is it rent revenue? Is it interest expense? Is it interest revenue? Is it interest payable? Is it interest receivable? Always fill out the title of the account properly. Okay? Okay, any questions on the accrued expenses handout? If not, let's jump over to the accrued revenues. Okay. Company G, the company has completed consulting services of $19,000 for a client, but this client has not paid the company. We haven't even billed them. Okay? Now, we've completed the services, so the revenue is earned, isn't it? Doesn't matter that they haven't paid. So we have to show that accounts receivable on the books, and we have to book that as revenue, okay, for the $19,000. Because that's revenue we earned in 2011. And that's a receivable that we should have at 2011. Okay? Are you with me? All right, Company H. The company has earned, but not yet recorded, $390 of interest that it has earned from investments in a 90-day certificate of deposit for the year ended 12/31/2011. Now, how much have we earned that hasn't been recorded? $390. So this is the entry. Look, there's an interest receivable and an interest revenue. All right? Now, sometimes people get confused between, is this interest revenue or interest expense? Just read the problem real carefully. Because there's times companies will pay interest, there's times companies receive interest. So you have to see, is it on an investment or is it on some sort of liability? Okay. Sarah, do you have a question?
Yes. Would you accept accounts receivable, or is it specifically interest?
That's a great question. Thank you for asking that.
Receivable.
Accounts receivable, oh, I probably wouldn't take off for it, but interest receivable is probably a better account. Accounts receivable is more for like customers. Okay? Kind of like, again, the interest payable versus the accounts payable. All right? All right. Company I think is the last one for these handouts. The company collects monthly rent from the tenants in their building. Now this time we are the landlord, right? One tenant whose rent is $13,000 per month, they haven't paid us their rent for December. Oh, what'd I say? Thank you. Always point out when I say or write errors. Let me read it again. Thank you, Jacob. The company collects monthly rent from the tenants in their building. One tenant whose rent is $1,300 per month hasn't paid us their rent for December. So have we earned that $1,300? Yes. So we debit rent receivable and credit rent revenue. Here I'd probably be a little bit more allowable for if you put accounts receivable. But that's the AJE. Okay? Now remember the rule, the REAL rule, right? Because sometimes people will do something weird like they'll debit rent receivable and they'll credit rent payable. Okay? Well, that's an asset and a liability. It's not going to be that way, is it? You always you always adjust a revenue or an expense and an asset or a liability. Cool? All right, any questions on that handout? Okay, before I forget, Chapter 3, I actually have the Connect assignment in two parts, Part A and Part B. Okay? So I just assigned the Part A. And after this lecture, you should probably prioritize that, okay? Cool. So after this lecture, you should be equipped to do Chapter 3 Connect assignment Part A. All right? Awesome. Okay, let's jump over now to those quick studies that I assigned. I believe it was Quick Study 3.2, Quick Study 3.3 on page 118. Is that correct? Okay, so dig those out. All right. On July 1st, 2011, Baxter Company paid $1,800 for 6 months of insurance coverage. No adjustments have been made to the prepaid insurance account, and it is now December 31, 2011. In other words, this company does not do monthly AJEs. They only do annual AJEs. Prepare the journal entry to reflect expiration of the insurance. Now, okay, so how much of that insurance has been, quote, used up? Actually, all of it, hasn't it? So it has all been used up. So the journal entry would be as follows. Okay? It's a debit to insurance expense, a credit to prepaid insurance. All right? Questions? Next one, Quick Study 3.2b. Terrell Company has a supplies account balance of $1,000 on January 1, 2011. During 2011, it purchases $3,000 of supplies. As of December 31st, 2011, a supplies inventory shows $1,300 of supplies available. So how much was used up? How much was used up, folks? $2,700, right? So the journal entry is as follows. Okay? Questions? Jake?
Well, one on the last one and one on this one. But on the last one, it says July 1st, 2011 to December 31st. And that's 5 months. Is it not?
July to December is 6 months, right?
Well, are you including?
We're including July because it's at the beginning of July. So
Right.
basically what you got the beginning of July, all of July, August, September, October, November, December.
Oh, I was missing a month. Whoops.
It's all right.
Wow, that's bad.
Common mistake.
And on the second one,
Yeah.
when it says office supplies available, I kind of get that confused.
Available is like that's what is remaining. That's what we have
On hand.
on hand
Okay.
That you haven't used up.
Okay.
that we haven't used up. That's how many beers are left in the refrigerator.
Yeah.
Okay? Available. All right? Cool? Good questions. Any others on Quick Study 3-2? Are these getting easier at all? I'm going to AJE you to death because I love you, okay? So the way you learn these things is just to keep doing them and doing them and doing them. Even when we're in Chapter 4, I might occasionally give you some Chapter 3 homework, okay? Just because I want you to do them. So hopefully it's getting a little easier, isn't it? Okay? All right. Quick Study 3.3. Carlos Company purchases $30,000 of equipment on January 1st, 2011. The equipment is expected to last 5 years and be worth $5,000 at the end of that time. So that $5,000 is what we call the residual value or the salvage value. Prepare the entry to record 1 year's depreciation of $5,000 for the equipment. Well, we could have actually figured that out, right? We could have taken the cost of $30,000 minus the salvage value of $5,000 divided by 5 years and gotten $5,000 per year. But they went ahead and told us because they're being nice. So the journal entry, depreciation expense, accumulated depreciation for $5,000. You don't need to put all that explanation. Okay?
Do we need to write like equipment?
Nah, that's all right. You could just say depreciation expense and accumulated depreciation. Okay?
Is that mostly the categories of what you just the depreciation expense and accumulated? Is that the only things you're gonna write? Like, is there anything else that you could write there?
Well, you could write the explanation, but I usually don't require
Well,
it.
I mean, like you have different insurance expenses and all that stuff. Would you have different like receivables or not? You can't really have that with depreciation, can you?
Not so much receivables on depreciation. So for depreciation, those are pretty much the two accounts you're going to see.
That's what I was wondering.
Okay. Kara.
I might be reading it wrong, but it said to prepare it for 1 year's depreciation. So wouldn't you do 30,000 minus 5,000 and then divide it by 12 months?
No, because what they're saying is they don't do depreciation entry AJEs each month. They just do them for 1 year at a time. Okay. So I mean, if you did it divided by, I mean, it's 5,000 per year, right? So they could certainly do that on a monthly basis, but they're just saying no, we only do them once a year.
Okay.
Okay? Cool. Any others? Okay, Quick Study 3.3b. Chavez Company purchased $40,000 of land on January 1, 2011. The land is expected to last indefinitely. What depreciation adjustment, if any, should be made with respect to the land account as of December 31st, 2011? What'd you get? We don't depreciate land, do we? Trick question.
Could the value go up, though?
Okay, good question. Let me come back to it for a second. But we do not depreciate land. I think I mentioned that last lecture, didn't I? Yeah. We do not depreciate land. And we'll talk more about this in chapter 10. But when we say land, we just mean acreage. I don't mean things like parking lot or if I do a lot of landscaping and land improvements. No, I'm just talking land is just acreage. Bunnies running around on it, tumbleweeds blowing by. Okay, we don't depreciate land. Your question was a good question. Sarah, you said, restate your question?
Well, the value of the land could go up. So
That's
would
true.
you
But remember, and I'll go back to you, I'm glad you asked that. Remember, depreciation is not our attempt to write our assets down to whatever their market value are, or up to their market value.
Yeah.
Okay? Depreciation is spreading out the expense over a reasonable amount of time. Okay? The building you're sitting in right now is fully depreciated for JCCC. That means the book value of this building is actually 0. Is this building worth 0? Certainly not, okay? Common confusion. Depreciation is not our attempts to write it up or down to market value. So great question. All right, any questions on those quick studies? All right, let's jump over to, was exercise 3.5 the next one?
3, 4. Yes, 3, 5.
Okay, cool. Exercise 3.5. This is the one that was kind of more of an algebra one than a accounting one, wasn't it? Okay. So what they told us is they want us to figure out the missing amounts in each of the 4 separate situations. So the 4 items of info are the supplies available at the prior year end, which is the same thing as the supplies available at the current year beginning, right? Supplies purchased, supplies available at the current year end, and then the supplies expense. And the supplies expense would be the amount of supplies we used up. Okay. Now, in each situation, they give us 3 amounts and 1 unknown, correct? So we can always solve the equation if there's only 1 unknown, right, from algebra? So let's take a look at the first situation. And remember, we can do a T account on these, can't we? This would be the beginning balance. This would be the ending balance, correct? This would be the supplies purchased, right? And this would be the supplies used up. And this is thus how much we're going to expense. Cool? So let's go ahead and do the first one. They tell us that the beginning year balance, the beginning of the period balance is what, 300? Is that correct? And how much did we purchase? 2,100? Is that right? And then they tell us our ending balance, is that correct? And what is that? 750. So this is our unknown. We only have 1 unknown, right? We always know that that plus that minus that equals that. Okay, I'm not going to do each one of these in this much detail. But algebraically, that would mean that 300 plus 2,100 minus our question mark equals 750, right? And if you don't know how to solve that right there, that's probably more of a Math Resource Center algebra sort of question, okay? But if we do that, our question mark equals what? What'd you get?
1650.
1650. And then just plug that in. See, make sure it works. 300 plus 2,100 minus 1650, does that equal 750? Yes, it does. Okay? So the answer to those, I'm just going to put them up there. The answer to each one of those after it is solved the same way. Okay? You can do a T account. I think the shaded box is what you had to figure out, wasn't it? Okay? So that's kind of just practice as far as knowing how to back into the number in the T account. All right? Keep it on the Elmo if you would. All right, any questions on any of those? Did anybody get all 4 of those answers right? Raise your hand. Okay. About half you. Good. All right. Any questions on that? I think we're almost all done going through the homework, aren't we? The only one we have left is 3-4C. Is that right? And that's usually one that's kind of tricky for people. Did you guys get it? Anybody? All right, let's take a look. This is the first time we've done one of these kind of accrued salary ones. So, like I said, I didn't know if I totally expected you to get this, but I like you to struggle with it for a little bit, and then we'll work it out in class. All right, even though we're only doing C, we need to read the heading, don't we? The following 3 separate situations require AJEs to prepare financial statements as of April 30th. Now, you always want to know what date does it need to be adjusted to. What date are the financial statements at? And they're at April 30th. It's not always 12/31. For each situation, prepare both the April 30 adjusting journal entry and the subsequent entry during May to record the payment of the accrued expense. Okay? So let's hop down to C. Total weekly salaries expense for all employees is $9,000. Okay? This amount is paid at the end of day on Friday of each work week. Okay? April 30 falls on Tuesday of the year, which means that the employees had worked 2 days since the last payday. The next payday is May the 3rd. Okay, let's kind of, I like when we're first learning these to kind of look at a calendar and visually represent this. All right? So they tell us that this is a calendar, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, okay? They tell us that let's see, April 30 falls on a Tuesday, is that right? So that, let's just say this is April 30th, correct? This is 29, 28, 27, 26, 25, 24, 23, 22, 21. April is one of those months that only has 30 days, right? So Wednesday, thus, is May the 1st, correct? And this is May the 2nd, 3rd, 4th, 5th, 6th, 7th, 8th. Okay, fine. Now, what else do they tell us? They tell us that, let me get my other pens here. We are doing financial statements as of the end of the day, April 30th. So sometimes I kind of like to draw a line there, okay? Now, what do they tell us is our weekly payroll? Our weekly payroll is $9,000. Is that correct? Okay. And when do we pay? We pay at the end of the day on Friday of each workday week, right? So we paid them on Friday, April 26th for this work week, correct? Now, it's the end of the day, April 30th. Now, if $9,000 is our weekly payroll, what is our daily payroll if they work a 5-day work week? $1,800 a day, correct? So what happened here is they didn't work on Sundays. Monday, our employees worked and earned $1,800, correct? Tuesday, our employees worked and earned $1,800. Now, are we going to pay them at the end of the day, Thursday or Tuesday? No, but we owe them, do we not? Don't we owe them some money as of the end of that day? How much money do we owe our employees? $3,600, okay? We owe them for those 2 days. We're not going to pay them early. They're not getting a check on April 30th. We're not going to pay them until Friday, right? But as of the end of the day, April 30th, our employees have earned $1,800 plus $1,800, which is $3,600. Okay? So our AJE our 430 AJE is a debit to salaries expense for how much? 3,600? And what do we credit? Salaries payable or salary payable. That is our AJE for those 2 work days. Correct? Does that make sense? Now let me answer a question that I usually get asked over and over again. Okay? So try to engage so I only have to answer this once. People say, what's the difference between salaries and wages? Okay? Do you know? Salaries is like if you work somewhere and you get paid $50,000 a year. That's your salary. Wages is like if you are an hourly employee and you get paid $15 an hour. Okay? So if I had a restaurant, chances are like all the servers and the cooks and stuff would be wages because they get paid hourly. But maybe the manager of the restaurant has a salary of $40,000 per year. Okay? Now, I always look to see if it says salaries or if it says wages. Okay? I'd prefer if it says salaries that you say salaries expense and salaries payable. And if it says wages, that you say wages expense and wages payable. Okay? On the test, I'm not sure that I would mark it off, but that's the difference between salaries and wages, and I just try to do the right one. Okay? All right. Now, they also, if you read the instructions, they want us to make the journal entry. Now this is not going to be an AJE. This is just going to be a regular journal entry, isn't it? But they want us to make the journal entry when we actually pay in regards to this accrued expense. So when do we pay? We pay on Friday, is that correct? So this is our May 3rd JE. This is not an AJE, and we know that because we're not making it on the last day of the period. Now, how much cash do we pay out to our employees? How much? $9,000. Because we didn't pay them on Tuesday, did we? As a matter of fact, they're never even going to know we made this AJE. They don't know or they don't care. Okay? So we credit cash for $9,000. Now, how much of that $9,000 has not yet been expensed but needs to be? How much of that $9,000 has not yet been expensed but needs to be? How much? How many days worth? 3. That day, and that day. So 3 times 1,800 is what? 5,400? So we debit salary expense for $5,400. Cool? Now this journal entry, does this balance? Does the debits and credits equal? Is that a problem? Actually, it's not. For this type of JE, that doesn't need to balance. I'm lying. All JEs have to balance, okay? Scared you there, didn't I? This doesn't equal, right? This side looks like it needs about $3,600 worth of help, doesn't it?
Yeah.
What do we debit?
Salaries.
We debit salaries payable because we've just paid that liability off, haven't we? Okay? I'm going to make a little note. This, can't see it, can you? This is not an AJE. Just a journal entry. All right. Now I want to say a few more things about this, but first, are there questions in regards to this one? Any questions? I want you to see what we did here. It's a beautiful thing. Remember the matching principle? We need to match expenses to the periods in which they help create revenue. Do you see by doing this AJE, we put 2 days or $3,600 worth on the April income statement? Okay? Right? Where they belong, where it's matched properly. And then we put the other 3 days of salaries expense. That's going to be on May's income statement, isn't it? Remember, an AJE does two things. It brings an asset or liability amount to its proper balance, and it records an expense or revenue. So see how these entries accomplished all of that? Make sense? Okay, let's have you do one of these. Let's try to do another one now that you kind of know how to do it. Okay? Let's do quick study 3.5. And we'll play that snazzy jazzy JCCC music. Have you guys listened to the music? The music, the intro music to the lectures, you really should listen to it. It sounds just like a sitcom or something. It's like ba-da-da. Then I feel like a Seinfeld episode or something. But anyways, they're going to play this music, and I want you to do quick study 3.5 for you at home. You do it as well. I'll give you a few minutes to do that. It wants you to make the AJE. And I want you to also, don't go away from me yet. I want you to also make the journal entry when the person actually gets paid. Okay? So the same thing we just did. Do the AJE and the journal entry when they actually get paid. All right, we'll see you in a few. All right. Hope you're done. If not, just push pause and you can get it done, and then turn us on for you folks at home. Somebody asked is this going to be on a test. I'm glad they asked that. Yes. I always have one of these problems on the test. It's not even a multiple choice. I always put one of these problems on the test, so you'll want to know how to do this. Okay? Let's take a look. Okay, quick study 3.5. Marcia employs one college student every summer in her coffee shop. The student works the 5 weekdays and is paid on the following Monday. Okay? Motor adjusts her books monthly, if needed, so note that, to show salaries earned but unpaid at month end. The student worked the last week of July. Friday is August the 1st. If the student earns $100 per day, what AJE must they make on July 31 to correctly record accrued salaries expense for July? Okay, so here is our situation. Let's take a look. Okay, this is our situation right here. Okay. Now, do they tell us if it's wages or salaries? I think they say salaries, don't they? Okay. So I like to use what they told us to do. Okay, our particular situation, I think they tell us that Friday is August 1st, so the Thursday is July 31st, and that's what they're doing their books as of. Is that correct? So they're doing their books as of the end of this day. Now, how much is our daily payroll? There's only one employee this time. What's our daily payroll? $100. What's our weekly payroll thus? Okay, now they were paid on Monday, July 28th for this work week, right? So those days are paid for. There's no accrual there. Now they worked this day, right? And earned $100. They worked this day and earned $100. They worked this day and earned $100. And they worked this day and earned $100, didn't they? So how much do we owe as of July 31st but not have yet paid out? $400, right? So the July 31st AJE, I think I did it in black last time, but that's okay, is we debit salary expense. I got a little messy there. Salary expense for how much? 400. And what do I credit for 400? Salaries payable. That's our AJE. Made on the last day of the period. There's no cash in there or anything like that. Correct? Okay, any questions on that? Take a look at that.
I have a question about the problem. Is it saying that they didn't work in August? Like July was their last week? Or is it saying that...
I don't think it's saying they didn't work in August.
Okay.
The student works the last week of July.
Yeah.
So they worked that whole week. Friday is August 1st.
Just saying, okay.
Yeah. Okay. Now, what day do they actually get paid? Monday, what's the date, though? Okay, so they're going to get paid August 4th for this work week. And it sounds like they worked August 1st. So, the journal entry that we make for payment on August the 4th, that Monday, how much cash do we pay out? We pay out cash of $500, right? We didn't pay them on this day. There's no cash going out, is there? How many of those days have not been expensed but needs to be? One. The $100 right here. So we debit salary expense. What gets debited for 400? Salary payable, because we now have taken care of that liability. We've extinguished it, so to speak. So this, in black, this is not your AJE. This is the subsequent journal entry for payment. All right? Does that make sense? Is that what you all got? Cool. That is great. Great news. All right. Any other questions on that? Any other questions? Okay. Let me go ahead and give you homework, and I'll let you go. Okay. Let me see what I want you to do here. We're starting to finish up here, okay, folks? Starting to finish up. I want you to do... I'll put this up on the Elmo in just a second. But I want you to read page 109 and do quick study 3.11 on profit margin. I want you to do exercise 3.3. And exercise 3.6. So, here's your homework. Right there. Read page 109, do quick study 3.11, and do exercise 3.3 and exercise 3.6. Sound like a winner? All right, we'll see you guys next time. Bye-bye.